Good morning, everyone. My name is Dr. Osman. I'm presenting my research on the monthly analysis of gold market returns by means of decomposition analysis. Now, in this article, we examine whether the gold market returns are subject to abnormally positive or negative returns in some months of the calendar year. So we are looking for whether there exists some seasonal effects in the gold market. And we test our hypothesis that there might be some seasonal effects using gold prices in several different currencies. So we measure those currencies as global currencies such as US dollar, euro, and UK pound and other stuff. And then we also look at the currencies of the consumer markets where the consumption of gold is very high, such as Saudi Arabia, India, Turkey. Now, we apply both the statistical analysis and the decomposition techniques. So before we get into those techniques, I want to mention a few things about our data. So we look at the average monthly gold returns for major currencies such as US dollar, euro, Japanese yen, British pound, Canadian dollar, and Czech franc. So what we find is that based on the summer statistics, that the average monthly gold returns tend to be significant, and January is a positive month for gold returns in terms of euro, British pound, and Swiss franc. August is a positive month for gold noted terms in terms of British pound. Now, the correlation matrix shows us the prices are highly correlated among the major currencies, but the returns are not that much correlated. They are still highly correlated, but they are not as much as correlated as the price returns. So the correlations are still significant, and there seems to be a perfect correlation between nominal prices. However, when we measure the correlation in terms of percentage returns, the correlations become weaker. Now, next we look at the average monthly gold returns in terms of demand currencies such as Indian rupee and Turkish lira, Saudi Arabian rial, Emiratis dirham, and other things, and also Chinese money as well. So the nominal correlations are still highly positive, but interestingly, the returns on correlations are much lower than the nominal correlations. So for example, the correlation between the gold prices in Chinese yuan and Saudi rial becomes 0.50. Even more is like the correlation between the prices in terms of Indian rupee and Turkish lira becomes 0.41. So that shows us that there's some differentiation in terms of gold prices denoted in local currencies when we are looking at the returns. So what we model here, besides the statistical analysis, is we apply the decomposition technique, where functional form is based on exponentially growing variables. So we can accommodate the exponentially growing prices such as the gold price. Now we apply the monthly decomposition analysis again to both major currencies and the demand currencies. Applying this technique shows us that in some months such as January, February, October, there's an obvious positive tendency among the gold prices. However, we observe a negative tendency in April, June, and July. So when we look at the decomposition analysis in demand currencies, we also observe some sort of similar behavior. That there is a cyclical behavior in the gold prices, albeit with slight shifts in months. So from December to February, there seems to be a seasonal hike in gold prices, which turns into seasonal negative during the rest of the year. May, June, July are significantly negative periods. So this is a bit interesting because it shows that especially during December, January and February, the gold prices tend to be significantly positive. Whereas in the summer months, where they expect the gold prices to be higher, they're actually not really that much higher. So if you're looking for some sort of investment in the gold market, then it might be a better idea to wait until the summer months have passed, and then during the winter months, December, January, February, the prices tend to increase higher than the rest of the months. And also for countries with relatively weaker currencies, the gold seems to be a very highly significant factor in the household investment. And thank you for listening.